Hi, this is Kerry Artek with Wicked Stocks bringing you the Daily SPY Report for Friday, December 3rd, 2021. Before I jump into the charts, just want to remind you once again to please click like if you like the Daily SPY Report or any of the content that we're putting up on the YouTube Wicked Stocks channel, and also subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notifications each and every time new content has been uploaded for your viewing. The Daily SPY Report generally goes out by about 6 p.m. Central Standard Time each and every trading day for the next trading day, although this one's a little later today. I was on the road, and now I am doing the Daily SPY Report for Friday, December 3rd. Let's jump into the chart. I'm going to show you a chart that you're probably quite familiar with if you've been watching the Daily SPY Report for the last week, 2 or 3. We have the 466.24 channel bottom that we settled below a week ago today, in fact, and that set off a sell signal. At the time, I was thinking 3 to 5 weeks. Volatility has expanded. It is probably 3 or 4 times. The average daily range right now is about 3 to 4 times wider than it has been over the last couple of months or so. And so we're hitting price points very quickly right now. There's a lot of, obviously, fear in the market as to what's going on globally with the virus, so forth and so on, crude oil prices, et cetera, et cetera. I'm not going to get into all that right now. I'm just going to show you sort of the basic here in terms of support and resistance. These are levels that we can lean on into next week. 466.24 above and 442.11 below the market. I can show you on the support and resistance levels 442.11 below, 466.24 above. Those are the primary levels near term over the next few weeks. As far as 442.11 is concerned, over the next couple of months is a decent base of support. I don't know if we'll hit either one of those levels today. Inside that wide zone, I have session containment levels, 462.83 that just might contain a daily high, and 449.95 below the market that just might contain a daily low, although this would be the third time we've tested that level. Let me show you what that is. 449.95 is nothing more than a 50% downside retracement from the October low against the recent high that was put out a week and a half, 2 weeks ago, and that is at 449.95. We tested that on Wednesday. We came very close to testing it on Thursday, and it's still there. We're an appreciable distance away from it, where it just may contain daily lows, but I don't have to tell you to sort of tread lightly there. If we break 449.95 today, I do believe that 442.11 channel bottom is likely today, where we could actually bottom out into January trade, and from there rotate higher into January, into February perhaps. That 479.36 trend line then in reach within a month or two of testing the 442.11 level. But if we do close below 442.11 today, then I think you should expect in as little as 3 to 5 days the 427.56 long-term channel bottom. So that would be next week's big test, and that is a formation that could contain selling through Q1, and from there we could turn higher within several months. I've given you sort of downward targets if we were to close below 427.56. I don't see that happening today. I think that's highly unlikely. And in fact, on the way down, I think 442.11 may well contain selling into January trade. And once again, it's considered an intraday target if we break 449.95 today. Upside, I have 462.83. That's a descending 2/3 speed line. I think I showed how to construct speed lines a couple, 2-3 weeks ago. I'm not going to get into it today, but it is something of a trend-defining line study. I've been using it for years. It can contain daily highs. If we push through 462.83, then 466.24 is likely today, where we could top out through next week. And once again, if we close above 466.24, then we revisit that 479.36 long-term trend line probably by the end of next week, where we could top out into January trade and from there fall off. We also have a significant longer-term buy signal if we were to close above that 479.36 trend line over the next few weeks, and that would be in the order of 3 to 5 months. I'll be showing you, I have showed that in the past. but that is a long-term channel top that I would expect by Q2 if we were to close above 479.36 in the coming weeks. Now, inside all that, I do have intraday containment levels: 454.36 below the market, 458.68 above the market. The question, of course, is whether we will open inside that area. A lot can happen overnight, as has been with the overnight trade in the futures market, so forth and so on. If we break 454.36, that 449.95, 50% retracement is likely today, where once again we just might bottom out again on a daily basis. But as I say, breaking 449.95, you should prepare for 442.11 on an intraday basis. Upside, pushing or opening above 458.68, 462.83 in reach. Once again, that is that descending two-thirds speed line that may be able to contain daily buying pressures. So if we push through 462.83, once again, 466.24 likely, able to contain buying through next week, we can fall off from there once again, and within a week or two of testing 466.24, fall back to 442.11. And finally, I'll just leave you with this, and I've said it earlier in this audio: if we close above 466.24, then I think you should anticipate by the end of next week, once again, that 479.36 long-term trend line. I think that's all that needs to be said. Over the weekend, I'll be doing the weekly DIA, IWM, and Triple Q report. And then, of course, on Monday, a Sunday afternoon, you'll receive the Daily SPY report for Monday. And that's all I've got for this Daily SPY report for Friday, December 3rd. You have a great weekend. And please don't forget to click like and subscribe.